Hey everybody, Boris Schlossberg. Welcome to our restart of the daily technicals at BK Forex. We start today with obviously a very interesting and exciting day in the market. Mind the gap Monday for 318.13. As always, past performance not indicative of future results. Trading Forex carries high level risk may not be suitable for all investors. High degree of leverage can work against you as well as for you. Before deciding to trade any such leverage products, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists that you sustain a loss of some of your initial investment, and therefore you should not invest money you cannot afford to lose. You should be aware of all the risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. The information, including commentary and trade ideas provided on bkforex.com, should not be relied upon as substitute for extensive independent research, which should be performed before making investment decisions. BK Forex LLC and Com are merely providing this information for your general information, and the information and opinions presented here do not take into account particular individual investment objectives, financial situation, or needs, and all investors should obtain advice based upon their unique situation before making an investment decision. They should tailor trade size and leverage according to their own personal risk appetite. We're not responsible for any losses incurred on investments made by readers and clients as a result of information contained here. It would not render investment, legal, tax, or other professional advice. If such investment, legal, tax, or other professional advice is required, the service of a competent professional should be sought. Well, the key trade here obviously is this: the euro. Sorry, not the euro Swiss. The euro Swiss is going to be something I'm going to talk about later, but euro dollar, which opened a massive gaping gap off the fear from the fallout from the Cypriot news. And what's interesting, though, however, is despite the fact that we had the gap and the fact that we had massive amount of negative sentiment on the open of Asia, the pair has not broken the key support level. The key support level here isn't necessarily 2900, but if you go back on the hourly, on the daily chart, what you see is that the key support level here is this level, the 2880s. We held so far, and as a matter of fact, having a modest euro recovery here into that level. And that I think is quite interesting, because the fact that we held this level, and we came, if you look at this on a, let's go to just a 15-minute chart. I'll show you there was several attempts to try to run this level today. First we dipped here, then we dipped here, and yet have been able to hold the level as we stand. As a matter of fact, we're now approaching, I think, the 29.35 opening levels, and that's going to be a really interesting thing. If we can take out the 29.35 opening levels, the run towards the 50s could be possible. But having said all this, these small gap fills are not indicative of a major trend up. There's now going to be tremendous amount of resistance here at 50, then at 30, and at 30.50. And you would have to have, I think, probably a couple of days worth of healing for this gap to really refill, assuming that the market's calmed down and there's no further negative sentiment towards the euro. There's lots of potential further negative sentiments that could break this to the downside. This could be very much a temporary hold. And that's why it's very much worth watching, because all of these comeback rallies right now are just short covering rallies in the shortest sense of the word. If we get further negative sentiment that breaks the lows here, that would suggest further downside action, probably 2850 at least, possibly 2800. And the trade, in my opinion, would be a sell of the lows here as a more probable trade than any kind of a retrace to the upside for right now. We may fill. It may be it may be a 10% teapot as I initially thought, but the sentiment so far this morning has been so negative that it's worth to be cautious that any of these moves to the upside could be sold very hard as opportunities to just further get short at levels above the gap opening levels. Remember, there's a tremendous amount of longs trapped at every one of these levels, and there'll be a tremendous amount of interest to want to distribute as soon as these levels are hit. So we would have to have a very forceful short covering rally in order to be able to overcome all the distribution that's going to come in at 29.50 and 30 and at 30.50 as the day progresses. Now, the yen situation, very similar kind of a story, but a little bit healthier. We gapped out. We've been talking about the fact that the yen looked negative for quite some time. We've been very negative on the yen for about, I'd say, 3 or 4 days already, because we failed twice at the highs here. And then we obviously broke the 95.50s on Friday, and a break there took us all the way down to 95s. There was a bounce back level, and then now we came back and it gapped out and all the way down to 94s. This move down to 94s was sort of incomplete, because I thought that the move to 94s would take several days on a sort of a profit taking basis, but of course the gap basis created this instantaneous flush down there, and it was bought back. Now 95 becomes the first resistance level as everybody tries to fill the gap, and then 95.50. The story in the end is not nearly as drastic as it is in the euro, but still does look negative, and it's still going to face a lot of headwinds as the day progresses as well. So worth keeping an eye on that. A break here of the lows around 94s, that's going to be, I think, very, very telling, because if we make fresh lows in the yen, not only is that obviously going to be a negative for dollar yen, but euro yen also is going to collapse. But the point being is that if we take down below towards 94s here, as the day progresses, that's a very, very negative development. As a matter of fact, because it will also negate this bargain hunting that these hammers are showing right now. And then, of course, we distribute 93s and ultimately perhaps even, 93.50s and perhaps even down to 93s. So all of this kind of translates into a euro yen, which obviously also desperately now trying to fill the gap in a very, very small fashion over here. But we'll be facing lots of the resistance 23 and 24 as all of these trapped longs try to get out of their positions. Still, euro yen, just like dollar yen, looks on a very, very near-term basis as a short covering buy right now, with all of this bargain hunting visible on the charts. If it doesn't materialize, and if it starts to slide back down towards the lows, it'll be a very, very negative construct, because it would show that this rally that we're seeing right now, this sold off sellout rally, not really having much of an impact. Taking last look at a pound, which performing much better than obviously the euro is. It gapped open also. I think we have. Let me just go back to the 15-minute chart here. Just take a look at it. We had a minor. I guess it's not going to show me the gap here. A minor gappiness on the pound. The pound itself. The interesting thing is that it found support right above yesterday's lows. And that's relatively constructive, and obviously the pound on a relative strength basis looks much better than the euro, but the pound is a churn between 5100 and 5200. This is where it found a lot of resistance, and the key thing here is, even though the pound has found support here on the day's lows, a return back to the day's lows and a break of them could really open up a move towards the 50-50. So a pound is very much worth watching as a smaller recovery trade. Aussie dollar gapped open to 30.50, much smaller gap than the euro dollar. It would have to make up much less ground, but still, even if it does make up the ground, it has to make up the ground off the gap, and then it has to really overtake the 104.15 in order to become a true buy candidate, because that would suggest a much stronger momentum to the upside as the day progresses. Lastly, what's interesting here is that Euro Swiss gapped open, but as you can see here, held the 2150 level, and as a matter of fact, starting to rally. And perhaps this could be an interesting barometer for the rest of the day, because the fact that Euro Swiss has not given up 2150 is perhaps the biggest sign of confidence that the Eurozone is not completely falling apart in front of our eyes. And I think that should be something that we should be all watching as the day progresses. If we start to make a turn on this move, and it starts to really distribute all the way down to below the day's lows, that would be a very negative sell signal for risk. So as the day develops, we're watching for the fills in the euro dollar. Euro dollar just appears to be right now obviously breaking above the opening session lows, and that's going to be the first test here towards the 29.50. But as I said, at every level, you're going to meet a lot of resistance initially, as the trapped longs try to get out of their positions at whatever good prices they can. So 29.50 first level resistance, and 30 will be at the other major level resistance before we even consider the idea of 30.50 as a possible trade. A turn back and a break of the lows would be just a devastating blow to the longs, because we've held the lows at 28.80 through against all of this very, very thin markets in the open of Asia. And if we break them again in North America, that would suggest a much steeper and worse sell-off for the euro as the day proceeds. This is Boris Schlossberg, wishing you guys the best of luck and the best of trading. Over and out.